We have Max Murphy with us here from CFO Journal. Max, good morning.
Good morning. Hi.
So Groupon, last Friday night at literally almost the last minute when they could file their annual report with the SEC, they come out and they drop a bombshell saying that they'd had a problem with their previous accounting and with their internal controls. And this has just roiled the market. It has people saying, you know, how could this happen? And so you were looking at, you know, the CFO at the center of this storm.
Sure, Jason Childs.
Is he going to stay? Is he going to go? What's going to happen?
Well, as Shandy Rice had in her story, he's got the support of the board and the executives of the company, apparently. But I'm reminded of a Woody Woodpecker cartoon. If Woody had gone straight to the police, this never would have happened. And in her story, she has people familiar saying that the chief accounting officer came to Jason and they said, you know, hey, we're getting a lot more refunds. Yeah, Jason Childs, the CFO. We're getting a lot more refunds in January than we ever thought possible by our models, which apparently even led them to consider for a second that Groupon was totally broken and no one would buy anymore, which is a really scary thought that they would even come to that conclusion for a second. But it seems instead of going to their auditors and saying, hey, we have a massive problem here, they tried to build new models and figure it out themselves. They probably reported before they were ready, and that doesn't really look good for the CFO, even if ultimately the responsibility may lie lower in the financial hierarchy.
Well, this is not the first accounting black eye that's hit Groupon. I mean, they had problems before they filed for their IPO. There were questions from the SEC about their accounting practices when they were doing the roadshow. I mean, it seems as though this is a serial problem in the accounting department.
Well, you could make the case that how can any company possibly come to grips with internal controls and the accounting when you have, I think the grumpy old accountant said 17 acquisitions, expansion from 1 to 42 markets, from almost no sales to over $1 billion in a 4-year period. It really compressed a lot more recently than that into like the last year and a half. How could any company go through that?
Well, no, I completely disagree there.
Really?
You know what?
I would
you know what? If you can't have the controls, don't go public. Don't sell stock to the public.
You're absolutely
right.
right.
You have an obligation, and you actually have a legal obligation to have those controls. I don't buy that excuse, oh, they grow so fast. If you grew so fast, you were plenty happy to take the public's money. Wait.
Well, you're absolutely right. You should wait, and there is you know, it's ancillary to this, but there's with the jobs bill that the president is expected to sign, the Jobs Act. Everyone is saying this is going to allow Groupon after Groupon to come along and get these eased restrictions on what they have to disclose, how strong their internal controls are. And it's really unclear where Ernst & Young
It's interesting.
fits in
So really what we're seeing here is the internal controls do matter, especially when you have a smaller, fast-growing company. So what's Congress doing is they're rolling back the requirements for them.
That's absolutely right. And you can have this, you're supposed to have this brief period where you can covertly submit your IPO to the SEC and sort of test the waters without ever letting anyone know that you're doing it.
So if that had been in place when Groupon was going through the whole process of going public, would we ever have found out about some of its problems?
Well, I think that we would. I mean, I think that the proponents of the bill say that yes, you would still find the disclosure. There still are auditors. The procedures where the SEC and the company go back and forth would ultimately have to be disclosed after a short waiting period. So yes, we would have found out eventually. But back to your earlier point, you probably owe it to the public not to go public when you don't have a handle on your business.
But Max, I'm just baffled because when we hit the internet bubble at the end of the 90s into 2000, you know, a large part of the reason why the technology sector collapsed is because the IPO market was simply just too forgiving. Anybody who wanted to come public seemingly could come public. Somehow or other, keeping the sunshine out of the IPO process, as this jobs bill does, seems to threaten to open the door to the same sort of abuses.
It does, and I don't see how it's a good thing. I mean, people who want to take their companies public think it's great. People who are pro,
well, of course they do, because they're looking to cash in. Hey, if you come and give me $5 million, I'll think it's great too.
Yeah, absolutely. But I mean, I think, you know, it was a long time ago I covered penny stock fraudsters, and it seems like this gives them the ability to take that platform to a slightly higher, more public level before they're found out, which I don't think is a good thing.